Every time you say yes to something, you're saying no to other things. And every time you say yes to something that's unimportant, you're probably saying no to something that's important.
All right, welcome to the Quest for Keys, where we highlight key moments in entrepreneurs' lives that unlock the doors to their path of success. I'm your host, Hoan, and joining me is the ever-inspiring Alvin Wee. And today, we have an absolute powerhouse in the world of real estate investing and entrepreneurship joining us. He is not only a seasoned investor who has flipped hundreds of houses, but he is highly respected, and he's an author of 5 real estate books, all published by Bigger Pockets. He now focuses on syndicating large multifamily apartments. He runs the Drunk Real Estate podcast and currently coaches others to become multifamily apartment investors as well in his high-level community. Please welcome the man who really doesn't need an introduction, Mr. Jay Scott. What's up, Jay?
Wow, that was quite the introduction. I wish my wife thought so highly of me.
Oh, man. I'm sure she does. She just can't tell you. Right?
Perhaps.
She just can't tell you. That's all. She knows because she lives with you. She doesn't want to she doesn't want your head to be too big every single day. So I'll pretend that's the reason. Right. She just dulls it out a little bit. So Jay, it's been my pleasure to have known you for, I don't know, has it been 4 years now? We met right around when the pandemic was just about to happen. Like the week before the world was closing down. Jay and I are in golf carts driving around and shooting videos and learning about real estate. And then it's like, oh, the world changed. Surprise.
Yeah, I remember we were together the day we saw the big stock market drop at the beginning of COVID, at the end of February, beginning of March 2020. Yeah. Yeah,
but hey, the world kept on going and you kept on going, and you've evolved quite a bit. It's very impressive watching you. I love your content on social media. It's like you are able to take crazy data and stats and the economy and all of this stuff that's kind of nerdy, kind of whatever. You put a nice spin on it, and you actually get people to read the whole thing, even though your posts are this long. People read top to bottom. And here's the coolest part. Even though you say this is not a political post, you create political fires all over in your comments, which is really, really funny, despite the first sentence saying, this is not political. This is just the truth.
I can tell people what I had for lunch today, and they'll think it's a political statement. So these days it's pretty hard to talk about anything that relates to economics, legislation, finance, whatever, without people wanting to put some political spin on it. So that's just the world we live in.
Yeah, and one of the best things about you, though, Jay, sorry. The best things about you, Jay, is that you are not only a great business person, but you are a great family person, right? You have a wife, you have kids, and this podcast is going to be shorter than the other ones because you have to go pick up your kids, which is a fantastic thing. I love every aspect of who you are and how you are, because you're a good role model for a lot of people to follow, especially people like me who are really engineering technical numbers. You make numbers cool. So I applaud you for all of that. So thanks, Jay, for being that shining star.
I appreciate that. I appreciate that.
So let's get into it. So Jay, how would you describe yourself for those who don't know you yet, but they should? Who are you? What do you do? And why should people care?
I'm not sure people should care, but I'll answer the question anyway. So I'm a former engineer, MBA, business guy. Did the tech thing for a long time. In 2008, left the tech world, started a family. My wife left the tech world at the same time. We started a family, and we wanted to do something where we could prioritize life over work, family over work. And so we fell into real estate back in 2008. Not really an interesting story, but we ended up flipping houses. We flipped houses for about a decade, and then kind of got bored of that and a little bit burned out, and was looking for a new challenge. Thought about going back to do some either tech or entrepreneurship. stuff and ended up falling into multifamily investing. And so for the last 6 years or so, I've been investing in large multifamily around the country. And that's the quick version.
When you say large multifamily, what size are we talking?
We target minimum 150 units and above.
Nice. What's the biggest one that you guys are currently invested in?
We own a 409 unit property. So 152 is probably the smallest, 409 is the largest.
Wow. Was that really different going from flipping a bunch of single families to now investing in 100-unit apartment buildings?
Yeah. So there's a lot of differences. And what I like to tell people is you're going to get some experience doing the small stuff, flipping a house or buying a rental or even wholesaling. You'll learn the process. You'll learn what it means to buy and sell a house. You'll learn what the process is like to go through a closing and to sign a contract and to do inspections and to do appraisals and to deal with all the ridiculous stuff that you have to deal with to get through a closing and get a house closed. And then on the back end, basically getting it ready for sale and selling it and dealing with all the stuff, dealing with the buyer. And so going through the process once or twice is a great introduction to real estate. But what I like to tell people is whether you flipped 2 houses or 200 houses, it's the same amount of experience that's going to translate to larger multifamily. You're going to get the experience and the knowledge that you gain from doing that first flip is going to carry you as far as doing, again, 50 or 100 or 200 flips into multifamily. Because where multifamily really stands out is when you're flipping houses, when you're doing single family, typically speaking, you're a one-man show. There's not enough profit potential, whether it's a flip, the ordinary income, or whether it's a rental, the cash flow or capital gains on the back end. There's not enough that you can split that up amongst 2 or 3 or 5 people on a given deal, because neither is going to make enough that it's really worth the effort. But on a multifamily property, it's just the opposite. It's very difficult for anybody to do this process themselves. Very few people, nobody I've ever met has the knowledge, the expertise, the bandwidth, and the interest in doing all of these things for a large multifamily deal, because it takes basically the same set of skills, but to another level. So just to give you an example, for a single family, you have to find deals. You need to be able to do acquisitions. For a single family, that could be working with a real estate agent who goes on the MLS and finds deals. It could be bandit signs. It could be buying lists, pre-foreclosure lists. It could be buying houses from the courthouse steps, whatever it is. And that's something that, it takes work and you have to build up some expertise. But if I wanted to buy a single family house or teach somebody how to buy a single family house today, I could probably teach them how to find their first house in a few weeks. On the multifamily side, it's a whole lot different. I've literally been searching for my last big multifamily deal for 2 years now, because there's a lot more competition. There's a lot fewer properties out there, and it's very much a relationship game. So if I go into a new area in multifamily and I want to buy a 200 unit property, the first thing I'm going to do is I'm going to start networking with brokers in that area. And so I'm going to find a list of brokers that sell 200 unit properties. Maybe there are 10 of them in the area. I'm going to call them up or send them an email. I'm going to introduce myself. They're going to think, okay, this person's never bought in my area. I don't care that he's flipped 500 houses or owns 1,200 units other places. He's never bought anything here. So I'm not going to put a lot of faith that he's ever going to. And so they might send me some crappy deals. And what I'll do is I'll take those deals, I'll underwrite them, I'll give them a lot of really detailed feedback on those deals, why it's not exactly what I'm looking for, why the numbers don't work. And hopefully they're going to have a little light bulb moment and they're going to think, okay, this guy knows what he's doing. He's serious. He's not just wasting my time. And then they'll send me some better deals. And we'll go through that process again. We may go through that process for 6 or 12 months before they decide, okay, this guy's not going anywhere. He really has the ability to buy a 20 or 30 or $50 million property. And then they'll start sending me the good deals. And so to be an acquisitions person on the multifamily side, it's a full-time job. It might even be more than a full-time job. You may need a team of people doing this if you're doing it in multiple locations. So in the multifamily space, you're not going to do everything yourself. You're going to get really good at one thing, maybe really good at two things, but you're certainly not going to do the spectrum of things needed to complete a large multifamily deal. On a typical multifamily team, you've got somebody who's great at finding deals, your acquisitions person. You've got somebody who's great at the financing piece. They can raise the capital. They can raise the debt. They know how to work with mortgage brokers and investors. They know how to work with securities attorneys to deal with all the paperwork and the legal compliance. And then thirdly, you're going to have somebody who's really good at operating or running the property after it's been purchased. And so very rarely is the same person going to do multiple of those three things. You're probably going to need at least 3 people, sometimes 4, 5, 6 people for a large enough deal. And so if you want to get into multifamily, you're going to figure out what your skill set is, which one of those things that you're really great at, that your personality fits, that you're interested in doing, that you have the capacity, the knowledge, the time, the inclination to do. And then you're going to focus all your effort on getting great at that one thing. And then you're going to go find a couple partners who do the same exact thing, but for the other pieces. And then you're going to join forces and you're going to buy properties. In the single family world, you kind of get good at finding deals. You get good at renovations. You get good at selling. You get good at property management. You kind of do everything yourself. Jack of all trades, master of none.
What would you say your zone of genius is within the multifamily space?
Yeah. For me, I've gotten very good at raising capital. A lot of people think raising capital is all about being an extrovert and being a marketing and sales guy. You know me, Hoan. I'm the furthest thing from a sales guy or a marketing guy. I'm a tremendous introvert. Doing a podcast like this, I'm putting on an act here, acting all excited and into this. Inside, I'm like, this is really hard for me because I'm an introvert. Talking to people's hard. But what I found is with raising capital, it's not about sales and marketing. It really is about building trust with people. And there are ways to build trust with people without selling them, without marketing to them. And so I'm really good at building trust through communication, through providing education, through providing value. And so for me, raising capital is very much a process. It's a checklist that combined with my ability to teach people and educate people and prove that I'm trustworthy and knowledgeable about things has allowed me to raise capital. And so my superpower, I like to say, is that I can take complex subjects and make them relatively simple and explain them in ways that people understand. And that goes a long way towards building trust, building relationships, and then allows me to use those relationships and that trust to form partnerships with our investors where we get mutual benefit from them investing with us.
So that's an interesting perspective because I'm actually starting to raise capital this year for my projects and things like that. And it's really comforting to actually hear that from you because I'm very introverted as well. And it's been a challenge for me. That's kind of like one of my dragons. And so, I'm curious about like what flipped that switch for you and how were you able to sort of tackle that dragon of like switching from being introverted to all of a sudden having to raise capital? Was there an identity shift? And, I just want to understand that pivotal moment.
Yeah, absolutely. So that moment came when I partnered with Ashley Wilson, my current partner in the multifamily space, and we were doing our first deal. And I was helping them out she was teaching me the business. I was helping them out with various aspects of the deal. I was helping with the underwriting, with the due diligence process, basically just trying to learn the business. And she came to me and she said, "We need to raise capital for this deal. Can you help us raise capital?" I was like, I'm not a sales guy. I'm not going to go out there and pitch people or do sales calls. Or she's like, "That's not the way you raise capital." I'm like, "Well, what do I do to raise capital?" She said, "Well, you've been in this business for a decade now. You probably have people that know you, that follow you, that follow you on social media, that you have email conversations with. Just let them know you have a deal. Let them know that you have an opportunity for them that could be mutually beneficial. And then talk to them about it." And I was like, "Well, I don't think that's going to work, but okay, I'll give this a try." And so basically at that point, I had like a 20,000 person mailing list. I wasn't selling anything on my mailing list. Literally, I was just sending a newsletter every couple of weeks, talking about some topic that I was interested in. And so I sent an email to my list saying, "Hey, we've got this multifamily deal in Houston, Texas. We are looking to bring in passive investors, people that want to invest in the deal. And if anybody's interested, let me know. I'll provide you more information. And I started getting all these emails like, I've been following you for 10 years. I've been waiting for an opportunity to work with you or to invest with you or whatever. And so all these people are like, I want to invest. And I'm thinking to myself, well, I didn't have to market to them. I didn't have to sell. All I had to do was build that relationship and that trust over the years. And now all these people are excited about investing with me. And that was kind of the light bulb moment for me, which is that it's, capital raising isn't a single moment in time. It's not an event. It's a process. And so what I've realized is by following a checklist, I can build a pipeline of people that want to hear what I have to say. Then I can nurture that pipeline. I can, again, build that relationship, build the trust, convince them that I'm knowledgeable, that I'm trustworthy, that I'm not going to steal their money, that I know what I'm doing, that I'd be a good manager of their funds, a good fiduciary for them. And then at the end of the day, I put the opportunities out there. And if it meets their needs and they trust me, they'll say to me, okay, let's talk. Let's jump on a phone call. And that phone call, I've never once in my life said to somebody, hey, you should invest in this deal, or can I sign you up, or anything like that. It's here's the opportunity. If you'd like to invest, let me know. Be happy to give you more information or work with you. And then the ball's in their court.
That's amazing. I'm still trying to switch over, and there's that little, there's that little thing, that little dragon that's kind of gnawing at me a little bit. There's that, like, I don't know what to call that, man. Like, there's fears in there. But
so tell me what's the number one fear? What is the worst thing? This is what I do when somebody says to me they're scared, or if I'm scared. My wife and I talk about this all the time. I'm scared of something happening. My wife and I will look at each other and say, what is the worst thing that could happen? So tell me, you're raising capital. Give me the absolute worst case scenario in your head that's making this process difficult.
I guess it's not knowing what I don't know about, the capital raising, right? Because I don't know enough about building funds yet. Right now, I'm doing basically private capital on some of my projects. I'm worried about really building that fund and having to create a whole business around just, fundraising. And it's really having that commitment towards that direction right away. Right, because from what I heard, it's a huge undertaking. There's also a lot of capital raisers right now that are wishing like, oh, I wish I didn't start this fund, because it's all of a sudden a commitment. So that's kind of where my head's at. Like, do I want to go that direction? Do I just want to stick with my lane and just be an operator?
That makes perfect sense. And so that tells me that you haven't yet made the decision to raise capital.
I have not.
So it's not that you've made the decision and you're scared to do it. You haven't made the decision, and that's a good place to be because you have options. You don't have to raise capital. I mean, if you need capital, you can partner with somebody that has capital. You can joint venture. There are other ways to get capital if you don't want to raise capital. Because again, I think of it from this perspective: on any multifamily team or any commercial real estate team, there might be one person raising capital. Then there are a whole bunch of people doing other stuff. Those people doing other stuff, they are like you. They don't want to devote their life to raising capital. So what do? They partner with somebody like me. And so you need to decide, is this something, and let's be honest, this is going to be a serious commitment. I tell myself every time we do a deal, and I tell my investors, and I tell my wife, every time we do a new deal, I am committing to being in this business for another 5 years. Because I have that responsibility now to my investors, at least 5 years. It could be 7, could be 10, but I now have a responsibility to my investors to see this project through. And so every time we do a new deal, I'm kind of re-upping my contract, and my wife needs to be good with it. I need to be good with it. My kids need to be good with it. Whatever travel plans we have to retire and go see the world, that has to fall in. And so, you need to make that decision because it is a big commitment. But if you decide it is something you want to do, I'm confident that you can be successful doing it. You just need to make it the decision if you want to do it or not. And if not, again, there are plenty of other options. There are plenty of people out there like me that you can partner with.
That's a great answer. I mean, you're giving me a lot of boost of confidence now. Like, definitely something I need to decide at the end of the year. However, right now, this is about you. So let's focus on, I mean, right now we talked about dragons here. These are challenges that we kind of go through in life. And, I wanted to know, like, you faced market crashes, massive projects, personal risk. What's a lesser dragon you've faced? Maybe something internal like self-doubt, because I'm kind of going through a little bit of that. Or like overconfidence, and how did that shape you?
Oh, so I have imposter syndrome every single day. I started in this business in 2008, and people think that I'm like some real estate guru. I know less about, thanks, Hoan. I know less about real estate than probably most investors out there. Where I'm good is in other things. I'm really good at business. I'm really good at strategy. I'm really good at building and growing teams. I'm really good at communication. But the real estate part of real estate, I'm not really good at. If you were to ask me, my wife likes to joke I'm the only person she knows that has an electrical engineering degree that can't change a light bulb. Like you don't want me managing contractors. You don't want me managing like projects day to day. You don't want me on the ground in a house. I'll get hurt. If I walk into a house that's being rehabbed, I'll end up killing myself. I'll trip over something, or I'll get somebody will shoot me with a nail gun. I don't know. I'm not a real estate guy. I'm a business guy, and my business happens to be real estate. My inventory in my business happens to be real estate. Or I like to think in the multifamily world, I'm a private equity guy, and the assets that my private equity firm are buying aren't tech businesses. They're not retail businesses. They're not financial instruments. They're real estate. And so that's the way I like to think about things to alleviate that concern or that fear that I'm not a real estate guy, because I am some kind of guy. And so I just need to define what I am, be comfortable with what I am, and be comfortable that what I am is enough to be successful in this business. And so that's how I get past my imposter syndrome. If somebody says, hey, wow, you're a really smart real estate guy, I will correct them. I am not a smart real estate guy, but I'm a smart enough business guy that I can overcome my shortfalls in real estate.
That, I think, brings a lot of hope to a lot of people, because like the three of us, we create our wealth through real estate. And a lot of people are jumping on that wagon of, I want to be a real estate investor because I too want to create wealth. And real estate's been tried and true for hundreds of years, right? Thousands of years, whatever. So to hear from you, the guy, the real estate guy, Jay Scott, is not a real estate guy. He's the guy who's just like, I'm really good at these certain things. And then I just take those skills and I apply it to the real estate business. And so a lot of people with different skill sets, if they can figure out how they can morph it and make it fit into the real estate business, they can do really well as well. Like, you don't have to be a real estate guy. Oftentimes I tell people I hate real estate, and then they're shocked to hear those words come out of my mouth.
I despise real estate.
Right. I say it all the time, and people are like, oh my God, but Hoan, you talk about it all the time. I'm like, yeah, it's what affords my lifestyle. It's what affords me to hang out with my family 24/7, 365, right? It affords me all these great things. But the business, I couldn't care less. It's just like, yeah, it's how I make my money. And I would love for you to get involved, but like, I don't love it. I don't have a passion for it. It's not what I want it to be when I grew up. It creates wealth, and I love it for that. That's it.
And so, but there's a second piece of that. I'm not saying for you, but definitely for me. I'm not passionate about real estate, but I am passionate about growing and scaling businesses. And for me, real estate, again, is just that inventory. It could easily be I owned a shoe store and I was selling shoes, or I owned a restaurant and I was selling food, or I owned a car dealership, I was selling cars, or I owned whatever and I was selling whatever. It's just a business, and real estate is the inventory. And for me, the thing that I love and the challenge that I love is growing the business and making the business successful, regardless of what the inventory is, regardless of what I am buying and selling. And I think one of the things that has made me successful in this business is the fact that my thoughts on real estate transcend real estate. I don't think of it as I'm a real estate investor. I think of it as I'm a business owner. And by being a business owner, it forces me to think about things that somebody who says I'm a real estate investor isn't going to think about. I came in, flipped my first house, had no idea what I was doing. But what I did know was how to hire people that knew what they were doing. I knew how to build a business plan. I knew how to raise capital, not raise capital at that point, but I was going to banks. And I was finding partners that had money that came and partnered with me. And so what I was good at was all the traditional business stuff that had nothing to do with real estate. No different than if Bill Gates started Microsoft. He was a tech guy, but if he had started Microsoft without being a tech guy, plenty of tech companies are started by non-tech people who are smart enough to hire tech people and build the company around those people that can actually build the product. And so for me, the reason I was able to get successful in real estate was I was never stuck in the day-to-day. You never saw me dealing with contractors or walking down the aisles at Home Depot, or even going to closings in a lot of cases. I wasn't that guy. I was the one that was putting together the business plan. I was the one that was building the relationships. I was the one that was finding the deals and finding the capital and letting other people do the day-to-day stuff because I wasn't good at it. And so that forced me to focus on the business. And so we ended up doing high volume, low margin, which most real estate investors are just the opposite. They'll do 1 or 2 deals a year and they try and make the most money as possible off of them. Me, I looked at it as a Walmart type business. I wanted to do 50 flips a year, and I was happy to make less money on every deal because I knew how to get those economies of scale and to run that kind of business.
So can you share like a time when you felt like, these challenges or dragons had completely like defeated you, and what that recovery looked like, and how did that redefine your approach?
Yeah. Well, let's start with today. So I'm in multifamily today, and anybody that's in multifamily today probably feels a little bit dejected, a little bit frustrated. So we have a number of projects. We're actually very well positioned with our projects, unlike a lot of people out there who are dealing with capital calls and foreclosures. We're not faced with that sort of stuff, but we're definitely seeing struggles with our properties. We're seeing struggles in the market. For the most part, multifamily, the asset class has fallen 25 to 30% in value over the last 2 years, which, to put that into perspective, I mean, back in 2008, the single family market fell 20 to 25%. So basically what we're seeing in multifamily right now is akin to what we saw in residential real estate back in 2008. And it's depressing. It's really hard to go from like every day you wake up and thinking this is fun, we're making lots of money, we're buying deals, the deals are doing well, to, okay, this is what we're getting paid for, which is to deal with the hard. It's the analogy of the airline pilot. They don't get paid lots of money for the 98% of the time when the plane's on autopilot and they're flying through the sky smoothly. They're getting paid a lot of money for that 2% where something's gone wrong and now they need to problem solve and make sure the plane doesn't crash. And a lot of us in the multifamily space right now are in that 2% time. We're trying to keep the train on the tracks. We're trying to make sure that our investors are comfortable and we're being transparent and everybody knows what's going on, and just get through to the other side when hopefully we get into the next expansion phase of the economy. And real estate's fun again. And so, so every day I wake up and I think, I could have not done these deals 5 years ago, and I'd be sitting on a beach right now waiting for the market to get better. But that's not the reality. And so I wake up every day and I do the hard work. And so I'm certainly feeling that these days. Right now is probably, of the 16 years I've been in this business, right now is the least fun period that we've had. And so every day is, I'm not going to call it a struggle. I love what I do, and we're still doing great things by our investors, and we're not losing our properties or anything like that. But it's still, this is not the fun part of the business.
Wow. What an answer. Oh man, that's, I don't even know what to say about that. That's tough. That's tough. Now you wake up like, I gotta muscle through. But I do like what you said about that 2%. We get paid the big bucks because we know what to do when that 2%, when that struggle, when the stuff hits the wall. Yep. Like, that's what makes you valuable, because you can get through it.
And we see a lot of people who don't know how to do that 2% that 2% of stuff, and they're losing properties and they're doing capital calls. And the Warren Buffett cliche of we're seeing the tide's going out and we're seeing who is swimming naked. But even for those of us that I think have gotten lucky and done the right things and have experience, we're still struggling. It's still a tough time in this industry.
Wow. Okay. So I know you love looking at data, and you go through a lot of that on your Drunk Real Estate podcast. With the data of today, what is your outlook of the next, say, 4 years with the new president or beyond? Now, obviously, crystal balls aren't working, but you have some kind of prediction, right?
I don't like the word prediction. Right. I'm going to go with guess. I'm always happy to guess. But that's all it is. And I think right now is probably a harder time to guess than it has been any time in the last few years. I remember 2020, basically saying, yeah, this is easy. I know exactly what's going to happen. We're going to see massive inflation. And now's a great time to lock in basically long-term fixed rate debt at essentially 0% or 3% mortgage rates, I guess. And so that was easy. Now I think we're in a position where things are a lot more complicated, not necessarily because we don't know where the economy would naturally go, but because we have an incoming administration that is not doing I need to be careful how I say this. Trump has been very vocal about what he wants to do. But what we learned from his first administration is a lot of times when he talks, I think some of the time he talks, he doesn't even realize what he's saying. But other times he very much realizes what he's saying, and it's just a good negotiating position. That's his opening salvo. That's his opening. Okay, I'm going to put 60% tariffs on China and 10 to 20% tariffs on the rest of the world. And in his mind, he's saying, there's no way I'm actually going to do that, but I need to prepare them that this is going to be the worst case, so they come to the table ready to negotiate with me. And so when he says he's going to put 60% tariffs on China, I don't know if in his mind it's, I hate China, I'm going to put 60% tariffs on it because I really think it's the best thing, or I don't even care if it collapses the economy, I just want to do it. Or if in his mind it's, this is my negotiating tactic and it's worked in the past, let's see if it'll work this time. And same thing with deportation. So I don't want to talk about deportation from a political standpoint. Immigration from a political standpoint, we can have that discussion some other time. But immigration from an economic standpoint is really, really important. You might think that we should deport 10 million people because they shouldn't be in this country. We could have that discussion. But the discussion that there's no argument about is that if you deport 10 million people, we're going to destroy our economy, because those are the people that are doing the jobs that a lot of Americans don't want to do. They're doing the jobs that a lot of Americans wouldn't be good at doing. And they're doing the jobs that a lot of Americans that if those jobs weren't being done would start to suffer. And so I think, again, is that a negotiating tactic on his part? Is he saying I'm going to deport 10 million people in the hopes that the people that don't have jobs, that are criminals, that really shouldn't be here, if they kind of self-deport and then kind of give a reprieve to everybody else that's contributing to our economy? Or is he really thinking, I'm getting rid of 10 million people? And so since we don't know what he's doing, and then the third thing that he said that's going to have a major impact on the economy is he said he wants more control over the Fed. And he wants more control over Fed decisions. And he's made it very clear that what he means is, as president, he wants the ability to lower interest rates, because he knows well enough that lowering interest rates is going to spur the economy and is going to increase GDP, and it's going to increase employment, and it's going to increase borrowing and buying. Unfortunately, it's also going to increase inflation. So when he says, I want to take over the Fed, is he serious? Like, does he really want to go in and unilaterally decide we're lowering interest rates? And if he does have that power, which legally doesn't seem like he does, but who knows? If he does have that power, would he actually do it? Or would he say, nope, again, just a negotiating stance. I'm just trying to put pressure on Jerome Powell to be a little bit looser in his monetary policy. So we don't know. I will say that if Trump gets everything, if he actually follows through on everything he says, we are going to see a collapse of our economy like we haven't seen in 100 years. Let's also add to this his creating an organization. I'm not even going to call it a department because it's not an official governmental agency, but he created this organization with Elon Musk and Vivek Ramaswamy to basically cut costs. I don't think they're going to be able to do anything because at the end of the day, Congress controls the budget, not two people that Trump says, hey, I want you guys to make these decisions. But if Congress listens to them and they somehow figure out a way to cut $1 trillion or $2 trillion from the budget, and let's be clear, the only way to cut $2 trillion from the budget means cutting into mandatory parts of the budget, Social Security, Medicare, health benefits, interest payments on our debt. I mean, basically doing things that like you need congressional approval to do and are going to make a lot of people really upset. Again, if he does all of these things as promised, we're going to see a lot of bad stuff happen in the economy. If he goes the other direction and we realize it's all just a negotiating stance and he's going to be reasonable on all of these things after his firing that initial salvo and saying how hard he's going to go on all these things, and then he's completely reasonable, who knows? Maybe it'll work out. I suspect that it's going to be somewhere in the middle. He's going to go overboard on some things. He's not going to be able to accomplish other things. And what we're going to see is we're probably going to see some inflation. We're probably going to see some cost cutting that's going to lead to some higher unemployment. We're probably going to see a recession. But I don't think that's necessarily a bad thing. I think this country has been in need of a decent recession for 10, 15 years now. And so he'll get blamed. He'll look horrible, but I think at the end of the day, it's probably something we need to do anyway because we've got a lot of debt built up, both consumer, business, and governmental, that we just need to go away. And the way debt goes away is through a recession and defaults and foreclosures and bankruptcies. And so I think we need that reset to some degree anyway.
Wow. All right. So that was quite the summary.
I'm not good with 2 or 3 word answers.
Yeah. They joke about that on your podcast where you run and
I do a TED talk. They want a yes, no answer. I do a TED talk.
You do a TED talk every time. And that's fantastic because if people like the data, they like to hear where you're coming from, then you'll give it to them. So it sounds like Trump is kind of like trying to be like a good parent that for a long time just gave their kid a credit card that they can just buy whatever they want. And they're like, all right, no more of that. And they're cutting up the kid's credit card, that kind of thing.
Well, or more, he's at this stage, he's in if you keep doing that, I'm going to punish you and cut up your credit card. The question is he actually going to do that? Because as a parent, I can tell you, it's easy to tell your kids, hey, you do something, I'm going to punish you. And then they do it and you're just like, that's too much work. I mean, if I make him stay in his room for all weekend, I'm actually going to have to stay home all weekend and monitor. I don't want to make all that work for myself. Never mind. I'm not really going to punish you. So, and that's kind of where we are now. We don't know if he's really going to cut up the credit card or if he's just threatening that.
Wow. That's funny. All right, Jay, to respect your time, because we know you got to get out of here, we do have this one section that we call the triad of success. All right. Ooh. So we believe that true success is built on 3 essential pillars: health, wealth, and relationships. What key insights have you developed around these 3 pillars that to have the incredible life that you have? Like, what's the balance between those, or what philosophies have you come up around those 3 pillars?
So it's a hard one because I struggle with this every day. I will say from a relationship standpoint, all of my success has come about through relationships, primarily with my wife. My wife, like if you are in a relationship with somebody who doesn't share your vision and your goal and your risk tolerance, and basically excited to do the same thing that you're excited to do, you're going to face an uphill battle. I'm not saying don't get into that relationship. I'm not a relationship therapist. But I will say that it will make the wealth part of your relationship more difficult. Especially that whole risk tolerance thing. So for me, I've been very fortunate and have to give credit to Carol for most of the success that we've had, because we're just so in line with each other's goals and so supportive of each other. The wealth thing, I think it has to be the least important of those three. You can be happy with health and relationships and not having wealth. It's really hard to be happy if you don't have relationships or health. So if I had to rank the three, I think health and relationships are tied for number one, and wealth is much further down the list. I haven't been great on the health side. Like ever since my kids were born, I haven't taken off the baby weight. I like to joke. And through COVID, I put on even more baby weight, unfortunately. But the last few months, I've been very serious about working out and losing weight. And I felt better over the last couple months. And it's a good reminder to me how important health is, because what I realize is when you're healthy, it makes the relationship stuff so much easier, because when you feel good, it's a lot easier to have the energy to deal with all the stuff that makes relationships difficult. And when you feel good, it's so easy to get up early in the morning and get to work and deal with all the crappy stuff we're dealing with in the industry right now. And so I would say be healthy first, because that'll allow you to do the other two things. Have relationships second, really close to first. I guess I'll call health being you're putting the oxygen mask on yourself before you put it on your kids. You got to take care of yourself so that you can take care of everybody else. And the health is taking care of yourself. Then relationships is a really close second, and then wealth is far down that list.
Wow, there it is, straight from.
I just made that up I wasn't prepared for that question. So
well, we'll do one more rapid fire question for you. Okay,
I'm not going to rapid fire, but okay.
This is like, since this is quest for keys for us, right? But
okay.
What is a key that you lost and would do anything to get back?
Does it have to be something that I can realistically not get back, or can it be something I can realistically never get back?
Well, what is there something that, just pops to your mind?
Yeah. Time. Time for me is that thing that I will never get back. And unfortunately, for anybody that's listening to this, that's in their 20s or their 30s, I'm an old guy. I'm in my 50s. For anybody that's in their 20s and 30s, you're going to hear me say these words. You're not going to listen to me. You're going to kind of say like, yeah, of course. Yeah, I understand. I get it. You're going to say you're going to think about it. And then 20 or 30 years, you're going to look back and say, damn, I really should have listened to him. But don't take your time for granted. There's only a certain amount of it you're going to get, and learn to say no, because you need to be able to protect your time. I remember talking to, you guys may know who Jay Papasan is, author of The One Thing, works with Gary Keller Williams. I'm a big fan of his, and he and his wife were on my podcast a couple years ago, and she said something that's really stuck with me. Every time you say yes to something, you're saying no to other things. And every time you say yes to something that's unimportant, you're probably saying no to something that's important. So every time you say, hey, yeah, I will go do that thing that you really don't want to do or you shouldn't do for somebody that you don't really need to be helping out. I'm not saying don't help people. But every time you say yes to something, you're probably saying no to your family. You're probably saying no to other relationships that are important. You're probably saying no to time that you need to take care of yourself. And so be very protective of your time. And so that's one thing that over the years I haven't done. I'm a people pleaser, and I say yes to everybody. And I only in the last year or two or three have I really learned how to say no. And it's hard, but at the end of the day, if you learn that when you're young, you're gonna accomplish a whole lot more in your life. You're gonna be a whole lot happier.
Wow. All right. Well, Jay, I don't know if it was the people pleaser part or if you value our relationship, but I want to say thank you for being on this podcast. Thank you for saying yes. Thank you for sharing all your knowledge, your wisdom, and just thank you for being who you are, because you are an inspiration to so many people, including myself. I get to see you and I go, that's how you do it. Jay is doing it right.
Hoan, we've been friends for like 4 years now. And I mean, we don't get to see each other that often or talk that often, but every time I do talk to you, every time I see you on Facebook or social media, or we do something like this, I just think about the fact that you're like the nicest guy that I've ever met. And so just know that like there's a lot to be said for that. There these days it feels like there aren't a lot of nice people out there, and so people, I just take that as like the best compliment I could give you, because I value that, and so appreciate you being a good friend and being such a nice guy.
My man, Jay, thank you so much for that. That really.
And Alvin, I know we just met, but hopefully we can become friends as well.
Oh, I love it. I'd love to connect with you. That being said, like, how can people reach you?
Yeah, let's make it easy. jscott.com, just the letter J, SCOTT.com, and that'll link you out to anything you want, whether it be my podcast, my newsletters, my books. If you want to invest with us, if you want to learn about investing in multifamily, whatever you might be interested in, or you just want to connect with me over email, I think my email's in there as well.
Awesome.
Wow.
Well, there you go.
Awesome. Jay, you knocked it out of the park with this short episode. Great job.
I appreciate it. Thanks, guys.
Thank you.